In this video, we're going to look at the question, do you really need to trade with stops? Hey traders, a warm welcome to you. Okay, so question, do you really need to trade with stops? I'm going to focus this on an intraday basis because I think that's where stops are probably more important, potentially more important. Let's not kind of go around one angle or the other yet. If you're trading swing trading, then also this will be pertinent for you. If you're investing, possibly not, right? Because you're investing your money and you're going to let that run. An investment's going to work or it's not, unless the thing goes to zero. Maybe you've got a kind of a cancel all button that pulls you out of an investment that goes down by 90%. I don't know. Anyway, point is, this is about active trading, probably trading on margin, probably trading with leverage. Yes side, no side. The reasons we should have a stop, the reasons we shouldn't. Let's look at each of the arguments and let's dissect them one by one. So, do you really need to trade with stops? Let's have a look at the yes side. The yes side, you need protection. Pretty obvious argument, which is the first thing that people are going to say when they come out with this, is of course you need to trade with stops. If you don't have stops, you don't have any boundaries. You could risk is unlimited. Say you're shorting a stock, you've got unlimited risk. Can you afford to take that? The argument then could be, okay, that makes a lot of sense, right? I want to make sure that my risk is limited on each trade. I want to risk X amount, say $1,000 per trade, $100 per trade, 10,000, whatever the number, doesn't matter. I want to risk that and that's it. But does that truly protect you? One could argue, no, it doesn't. You could say from an operational perspective, you could get slippage, etc., etc. But regardless of that, could you still take multiple amounts of those trades per day in different instruments and still lose way more than you expected to? Yes, you can. So is there any point in having a stop? If you're going to lose 10 grand in a week, what's the matter with losing 10 grand on one trade versus 10 trades? It's the same thing. Maybe you've got more chance of success if you have a wider stop or no stop. It's something to think about, right? Let's have a look at no on this side. You can manage risk in other ways because there's a similarity between these two. You should need stops so that you can manage risk in other ways. There are guys out there who don't use stops. It's the way it is. They don't use stops because they do have risk management in place. They will scale in or out of a position. They will use a pair trading strategy and hedge the position. They will just use a mental point of getting out. And there is an argument to say that is superior to a stop. Let's say you've got a price level, let's call it 100, that you want to come out because you don't think the trade's going to work. Which is superior? A hard stop in at 100, that if it hits 100, you're out, or you saying at 100, I will review it and come out if I don't like it. Now, in theory, I would argue probably the latter. The human being able to look at how it's hit the 100, dissect all the information and make a decision. But with a big, massive caveat, you've got to be the most disciplined trader of all time. You can't have any other thing other than an objective view on that. So let's say it's spiked down to 100 and it's on low volume or something like that, and it's immediately kind of starting to creep back up. Let's actually look at that if we can put it on here. Let's say we've got this, it suddenly spikes down, then starts to do this. And let's say that was the 100. As a human, you would probably now go, all right, if it now revisits there, I'll come out of it. But at the moment, I'm going to assume that's a little spike. Whereas if you were doing it automatically, you'd be out of the trade. So that's an advantage. Now, of course, this advantage is if it rips straight through, you're going to be out at kind of 90 instead of the 100 that you wanted to be at. So there's pros and cons there. One thing I would say is if you look at any traders who do manage risk in other ways, every now and then they have brutal losses because you can't be strictly disciplined all the time. You're going to miss this. Market's going to drive through. You're going to make the wrong call. You're not going to be able to structure it. So they will have occasional hard losses that you wouldn't necessarily have with a stop. The question doesn't become whether you have that. The question becomes, does that offset the advantage gained by not getting stopped out on stuff that you didn't pull the trigger on? Who knows? That's something maybe for you to investigate. But without that boundary in place and without kind of iron discipline, you've got to have one or the other. If you haven't got the discipline, if you've got any sort of chinks in the armor of discipline, it's got to be stops, guys. No way to scale. What do I mean by no way to scale? So let's say you're doing it on one unit size and you want to scale to 2 to 3 to 4. How do you know how much risk that is? So if you're using a stop, then you do have a method and a structure that you can say, hey, well, my worst loss is this and this and that and the other. I can now scale and I know the risk and quantify the risk. I'm taking twice the risk. This is twice the results I expect. However, if you're not using a stop, can you trust yourself with suddenly trading a bigger size? It's harder to scale without having no risk parameters in place, because by the very nature of not using stops, you're saying, okay, I'm relying on my own judgment mostly as to when to cut the trade. How do I know when that is? Can I quantify now that risk now I'm trading in a bigger players league? Possibly not. The argument could be, hey, there's no way to scale unless you do use stops, because if you do use stops, at least you know what your risk is. And when you start playing at the big level, that becomes far, far more important than if you're trading at a small level. You could be trading at £1 a point if we're talking spread betting with no stops and probably get away with it and make £1,000. Could you then do that with £100 a point with the same method, the same strategy? Possibly, but you're leaving yourself vulnerable to be losing 100 grand. And that's where the issue potentially comes in. This is the big one, guys. It only takes one slip to wipe you out. If you take a trade and you do not execute your stop properly, you do not manage your risk, you're gone. You're out of there. I know I've seen traders, I've seen this happen to traders. They've gone into a trade, they've not used a stop loss. They're still holding that thing 6 months later. Like I said, it was a day trade. What are you doing? They're still holding it 6 months later. They're down 25 grand. They put them on, honestly, some of the story you hear are horrible, but it happens. And that would just not happen if you had a stop and you stuck to it. All right, further funding is hard without using a stop. So this is like if you were going to a prop firm, if you were going for external funding, or you were kind of advertising your system, or you were trying to get involved with a hedge fund or whatever it may be. You would struggle to get funding if you couldn't prove the risk you were taking. If you say, you know what, my risk management is I come out when I think it's not a good trade anymore, I don't think that would be enough for them to give you a couple of million quid to trade, if I'm honest. So that is a good reason to have a stop in place. So we talked about managing the risk in other ways. Another reason to not have stops is that markets often probe and test, don't they? They push to a level, they kind of spend 5-10 minutes there and come back again, because the probability of touch is twice the probability that the market will close there. That's just simple maths that they use in kind of calculating options. So if the market goes to the level, then there's a 50-50 chance that it goes down or up from there, if we're using that kind of strategy. So really, you're using disadvantage of that when you're executing with a stop. So when it's wicking about and going back and forth, maybe you don't want to be just like claiming that. Maybe you want to be reversing it using limits, but then using flexibility with your stop. So they often probe and they test. So why would you want to come out just on probes against you when in reality the chance of it closing at that level or below it is still 50-50? Something to consider. And the final thing is you can ride choppy markets. So let's say you go into the position, it starts to chop around, it starts to go down and up and stuff. If you've got a stop, you might get pinged out kind of 5 times trying to trade it. Whereas reality, if you haven't got a stop, you can ride the thing up and down until it finally goes in your direction. Of course, the argument could be, well, make your stop wider. Yes, okay. But if we don't use a stop, then we've got no chance of getting pinged out. Obviously, the flip side is if it does go in our direction and goes against us and keeps going and going and going, that loss is going to be massive. So should you really trade with a stop? Yes or no? On balance, my thoughts are you should trade with a stop, but with a caution of don't trade with a stop that's too aggressive, because a death by 1,000 cuts is still a death. Right, you can blow up on one trade or you can blow up on 100 small trades. If your stop is too tight, that's exactly what you'll do. Use the power of all of these things. These are all reasonably true in their own way. So markets do probe and test, so make your stop wider. Maybe if you don't like if you're getting pinged out too often, have an emergency stop that's like your whole day's worth of kind of loss parameter in one trade, but you come out earlier, so you allow both. So you have got that safety net, but you've still got the kind of ability to come out of a trade when it's not going your direction. Maybe do that. Maybe there's a hybrid of the two that's the sweet spot. Anyway, something to consider, guys, something to think about. Hope you enjoyed the video. See you next one. Take care. Bye-bye.